Hello guys, so in this session we shall be talking about the market valuations in general because from previously the past 6 to 7 months, basically from September 24 onwards, when we started to witness the market correction, not a crash, but a healthy correction, we have been talking about the market valuation multiples, price to earning multiples, price to book value multiples, EV to EBITDA multiples. And what do I mean by we? It's like everybody in the market have been talking about the valuations of the Indian markets, sometime coming closer to the fair valuation. Now, again, the valuations, if you try to talk about, have come closer to the September 24 highs, right? But here we need to understand that even if the valuations are high, that even if your price to earning multiple, price to book value multiple, EV to EBITDA multiple, and different sorts of other multiples are high, but are they justified? We have always learned as a student of finance, we have always learned as a student of financial modeling and valuation that books basically tell us that buy a cheap stock, that buy a stock having a lower price to earning ratio, or sell a stock having a higher price to earning ratio. Because the higher price to earning ratio always means the stock is expensive, the stock is overvalued. Sell off that stock. It might hamper your returns in the portfolio. It might hinder your alpha, right? But one thing here is we need to understand as a student of financial modeling and valuation practically, if we have at least some basic to intermediate understanding about the market is, it might not always be good to buy a stock having a lower price to earning ratio. And the vice versa is also true. It might not always be good to sell a stock having a higher price to earning ratio. It might happen a stock having a lower price to earning ratio might not be a growth oriented stock. Because anyway, if a stock is not having a good higher price to earning ratio, the growth might be hampered. Stock में growth ही नहीं होगी. That's one way of looking at it, right? If a stock is having growth, if a stock is having a futuristic growth, right? Because anyways, all these kind of forward multiples that we tend to calculate on a 1 year forward price to earning multiple, 2 year forward price to earning multiple, we're preparing financial models. We're trying to forecast the future earnings. From the future earnings, we're trying to calculate the free cash flows of firm. We're discounting the free cash flows of firm at a discount rate or the weighted average cost of capital to calculate the enterprise value, right? Then doing certain kind of adjustments to calculate the equity value and then dividing it by the outstanding shares to get the per share value, right? So if we can see the growth in a company, in its earnings, in its cash flows, because all the things we try to take into premise, we are seeing the profitability of the firm, the free cash flows of the firm, the debt to equity of the firm. Like even if the debt to equity is high, that debt should be justified. So as we popularly say that till the point of time, the cost of debt is less than cost of equity, taking more and more debt will always have a magnifying impact upon the EPS of the firm. Whether the operating leverage is kicking in, right? If the operating leverage is kicking in at a same amount of sales, you can make more profit, right? More profit can it can have a positive impact upon your bottom line, right? Having a good operating leverage of the firm, because when the benefit of the operating leverage tends to kick in, the PAT expands, right? So all these kinds of things, ROE, ROC, all these things, if they highlight growth and ultimately the management projections, reading management calls, conference calls, MD analysis, annual report, future plans for expansion, diversification, all these things, if they indicate growth, the price to earning will be high. Price to earning will definitely be high, right? And also one thing we need to understand that if your price to earning multiple is high, one way apart from growth, specifically if we try to look towards earnings, that earnings should be justified. If higher earnings are justifying a higher price to earning ratio, then what's bad to go for that stocks? And popularly, these kind of things we have seen majorly in the mid cap and the small cap space, because the earnings of the mid cap and the small cap have remained fairly strong. Like even if we talk about the year-on-year earnings, and that is something which I'm telling you as of the Q4 FY25, the last quarter of the Indian economy, right? Your Nifty 50 earnings in PAT basis just grew by 3.3%. Nifty 50 index, which comprises of top 50 market cap companies. Your PAT on a year-on-year basis grew by 3%, 3.3% to be precise. Now we can argue that the operating profit or the EBIT grew by some 5.5% odd, but on a quarter to quarter, the numbers can be a bit shaky, the numbers can be a bit volatile. But if we try to streamline, we try to take a smoothened version of this Q1 Q number, Y on Y is a much better metric to look at those. Out of that 3.3% का number, financials give you 6%, I would say financials give you a 6% decline on a year-on-year pattern, whereas the non-financials gave you a 3% growth on a year-on-year pattern. So that's for Nifty 50. If I talk about Nifty 150 mid-cap index, the Nifty 150 mid-cap index on a year-on-year in terms of PAT, it gave you a 28.2% growth, being aided by non-financials, around 33% growth year on year. Around 16-17% growth was for the financial space. A Nifty 500 as a broader universe, which tends to take into account your Nifty 50 or Nifty 150 and the Nifty 250 small cap index, on a year on year, it grew by 11%. Some 16% odd for non-financials and some 14% odd for the financial space, right? So here we can see the earning growth is much more in terms of the mid-cap space. Nifty 150 mid-cap companies may, we can see the earning growth is much more faster. We have been talking about the valuations, right? That Nifty 50 is fairly valued. Nifty mid-cap index is very highly valued now. Nifty small cap index again very highly valued now, right? But if we can see the earning growth, if we can see the positive free cash flows, the profitability of the company, the management outlook, ROE, ROCE, if all these commentaries, all these numbers being put into place indicate a good trajectory for these companies, then why not go for such companies? We are into an India growth story now. We are into the India growth story now. And all these themes, all these sectors, if we talk about, starting from telecom, starting from capital goods, make in India, clean energy, China plus one focusing towards much more of chemicals, right? Autos and auto ancillaries, healthcare services, consumer discretionaries, urbanization. All these things, basically, all these type of companies or themes, majorly you will find in the mid cap and the small cap space. And the probability of the mid cap companies becoming a large cap company is much more higher than the probability of a small cap becoming a large cap company directly. Mid caps have those earnings. Mid caps have the potential. The largest themes, the largest kind of growth companies, we talk about the India growth story, the next decade, the next 2 decades, 10 years, 20 years, 30 years down the line. But China was there 15 years, 20 years down the back with all these companies, all these set of companies that cater towards a higher nominal GDP growth, cater towards the prosperity of the economy, made China the second largest economy. All these things are favoring India now, right? And all these themes you will find majorly towards the mid cap and the small cap space. So even if the valuations seem high, but these companies will drive. There might be some correction. There might be some 5 to 10% odd correction in between. And that's the way the market works, right? If there is no correction, you won't be finding healthy opportunities to buy. But even if there is no correction, why fear out of such companies? You can have a composition towards a large and mid, but the thing is, even a large cap is not fairly valued now. Everything is going towards September highs. All the valuation multiples are coming closer to September highs. Even the Nifty 50 is not fairly valued now. We talk about a 10-year price to earning multiple for Nifty 50. It's around 20.6, 20.5. We're currently trading at a 22 times price to earning multiple, right? 1 year forward price to earning multiple is 28.5, 28.6. Even if I show you certain numbers as well, even if I show you certain numbers as well, right? See these numbers, correct? So here, this is the current Nifty 50 price to earning multiple. The current Nifty 50 price to earning multiple stands at 22.3. And this is as of today, right? So as of today, that is on the 17th of June, correct? So if I see कि सितंबर में when we reached all times high, ठीक है, उस टाइम प्राइस टू अर्निंग मल्टीपल कितना था? ठीक है, I can just change the timelines. I can just change the timelines. I can just go towards, I can just take any random date, September 10, 2024. And I can just go back maybe on a 1 week basis, September 17. The price to earning multiple was 23.6 and currently we stand at 22, right? So coming closer to it, right? In these charts, you can try to compare the averages. It is at a 1 year above. On a 1 year average basis, we generally trade at 19.6, right? 5 year average के basis पे नीचे हैं, But if you want to compare it specifically with September highs, because nowadays all the comparison is being done with September high kind of valuations only, and we're justifying the Nifty 50 based upon valuation. Okay, those are fairly valued. Those have crossed the fair valuation, right? Here, I'm not stressing you to purchase mid cap and small cap. You can also purchase large cap, but I'm telling you the underlying growth, which you will find much more towards the mid cap and small caps, right? Especially for the mid cap space, right? Because large cap companies, may they have that size, they will grow. They have the potential to grow. But the percentage increase in the growth will be lesser as compared to mid cap and small cap. So being a conservative investor, one can approach towards the large cap space. But if someone has a much of a combination of conservative plus aggressive or sheerly aggressive approach, have that time horizon, have that age, have that risk-taking appetite with them, can go for a small cap or a mid cap or a combination of large cap and a mid cap, having a conservative plus aggressive approach, right? So this was something we talked about the Nifty 50. Simply, I will type here Nifty 150 mid cap P ratio. Again, I'll go to the same website, Trendline. It is 34.3 as of now. The current P I'm talking about, it's not your 1 year forward. Okay, आज की डेट पे 34.3 price to earning. That is on the basis of $1 worth of earnings. We are willing to pay $34, right? On a $1 worth of earnings, we are willing to pay $34 if we want to invest into a Nifty Midcap 150. And the same logic holds true for what? And the same logic holds true for the Nifty 50 in terms of 22 times price to earning. ठीक है, मैं चला जाता हूँ सितंबर में. अप्रोक्सीमेट नंबर हो सकता है, देयर माइट बी अ फ्यू बेसिस पॉइंट्स अप एंड डाउन बिकॉज आई एम जस्ट टेकिंग अ रेंज. ठीक है, इफ आई गो बैक, लेट मी गो बैक टू सितंबर. कितना था? 45.2. कितना? 44.88. 44.88. वी हैव कम डाउन. So there is a huge gap in Nifty mid cap price to earning valuations. 34 पे हम खड़े हैं. September high में it was 44.8. It means the earnings have increased, the earnings have showed the momentum. Because simple logic mathematically सोचो कि when shall the price to earning be low? When your denominator, that is EPS, which is the proxy for profit, becomes high. So when your denominator figure is becoming high, anyways your price to earning will come down. That has also happened in case of Nifty 50, but not by a higher margin, right? Because Nifty 150 mid cap earnings की earnings ज्यादा रही हैं, consistent रही हैं, and that is why the valuations have come down. Even on a price to book value basis, right? There is a gap. There is a gap. If I go towards the Nifty 250 small cap index भी देख लेते हैं. I go to the same website, Trendline, very helpful. As of now, 32.7. मैं सेम टाइम पीरियड में चला जाता हूँ बिटवीन 10 to 17th. 10 सितंबर. अभी हम देखते हैं 32.4. It has reached that high. It has reached that high, right? So as of based upon earnings multiple, we can see mid cap space seems to be fairly attractive. Though emerging themes अपने EMS, China plus one, auto ancillaries, themes, urbanizations, all these kinds of capital goods are also present in small cap, but the quantum is much more in mid cap. So mid cap is showing a much more good projection in terms of the futuristic valuations, in terms of the futuristic earnings, right? Also, one thing we need to understand is, I'll just give you a number from FY19 to FY24. From FY19 to FY24, Nifty 50 EPS CAGR. FY19 to FY24, Nifty 50 EPS CAGR. EPS is a proxy for profit. Grew by 20%. For the same time period, Nifty 150 mid cap index EPS CAGR grew by 40%. And for the same time period, Nifty 250 small cap index EPS CAGR grew by how much? 30%. What's the projection? Nifty 50 for FY25 to FY28 expectation. EPS CAGR expected to grow by just 10.5%. For the same time period, FY25 to FY28 expectation, Nifty 150 mid cap index expected to grow by 20% odd. And small cap 250 index by just 17%. So again, mid cap is showing growth. But anyways, whenever we are trying to do an individual stock picking, whenever we are trying to do a bottom up approach, I won't be naming stocks, right? But the thing is, focus towards the profitability of the company, focus towards PAT, focus towards EBIT, focus towards EBITDA. For what type of companies you need to focus towards price to earning, what type of companies do you need to focus for price to book value, you need to know, right? So is space specific understanding we need to have, but mota the thing is you need to focus towards profitability, need to focus towards free cash flows, you need to focus towards ROCE, right? You need to focus towards management commentary, debt, right? The liquidity, you need to see how strong the balance sheet is. बैलेंस शीट की स्ट्रेंथ को देखने के लिए करंट रेशियो, क्विक रेशियो, कैश रेशियो, इन्वेंट्री टर्नओवर, वर्किंग कैपिटल साइकिल्स, all these things you need to know whenever you're analyzing a company, right? And that is on the basis of individual, be it you go for large cap or a small cap or a mid cap, correct? So that was all from my side, right? We'll be coming back with some more interesting discussion upon the market valuations. So that's all for today. I'll see you in the subsequent session. Thank you.